Welcome, everyone. Wonderful. I'm Tim Fargo. I'm a client CFO and tax partner here for Rose. And I want to introduce Jeff Brown. He's president and CEO of XCAL, Sporting and Shooting Fitness, and William Geong, who's the vice president of Prison Fellowship International. So we'll start with Jeff. Tell us a little about your history, the founding of the company.
I'm probably the oldest guy in here, so my history is really long. Really briefly, it started in 1973 when I joined the Navy, principally to go in for 2 years so I could get my GI Bill and go to school. Navy career ended 32 years later. Did use the GI Bill, did go to school, but it was 32 years spent doing something I really fell in love with. I was a Navy cryptologist, retired from the Navy, joined a couple of friends and started a small engineering company in Northern Virginia. I joined them when they started with 3 people. I was probably number 25 in the company. 9 years later, we were 1,100. We went from a single small business set-aside SIBR for about $5 million. And when we were acquired by Boeing for $850 million 9 years later, it was a pretty good day. I then spent the next 9 years with Boeing, did 27 mergers and acquisitions for Boeing, started a new business unit for them, and retired from Boeing in 2019, and then started XCAL Shooting Sports and Fitness with all 3 of my sons, 2 daughters-in-law, 4 grandchildren, a new venture on my 3rd retirement. We'll talk a little bit about what that means later.
Thank you. Very good. Wilson, tell us about your history, your experience in Prison Fellowship International.
Well, it's interesting that takes the Ted and Rose team to bring together 2 former Boeing executives. So I also have a long history of Boeing. So spent most of my professional career working for Boeing, involved in all kinds of international activities. The majority of my career in the international space or the non-US space. So my Boeing work has taken me to 24 countries and worked with a lot more, even virtually. And then so I was also involved with a lot of M&A activities. So I lost track, but I'm guessing it's somewhere around 3 dozen M&A activities that I was involved in. Different roles, again, all along the international space, setting up businesses and enabling the infrastructure in a lot of non-US locations, working through legal, financial, other challenges related to those businesses. And then my last 2 roles with the company, I was CFO for Boeing in Saudi Arabia, responsible for about $500 million worth of business there between our wholly owned businesses and our 2 joint ventures there, and some M&A activity. And then my last role with the company, I was actually selling airplanes on the commercial side of the business for Middle Eastern countries. And so my contract portfolio was about $20 billion. Again, long history there, but it really helped me prepare for the job I'm in now. So a little bit about Prison Fellowship International. Prison Fellowship International transforms the lives of prisoners, their families, and victims through a global network of ministry partners. And so we're in 122 countries currently. And so a lot of my international experience benefits that. And our vision is to break the cycle of crime and restore lives worldwide through Jesus' love. And so, again, how we're structured is we're headquartered here in the US with 122 affiliates, 3 subsidiaries in Canada, Germany, and Singapore, and employees in Africa, Latin America, and all those 3 subsidiaries, as well as other places. Let's just say a little bit of practice we had dealing with complexity within Boeing helps us deal with complexity in the nonprofit world as well. And we'll talk more about some of those other aspects.
Well, Wilson, let's go in there. We're talking about scaling the organization. How did the organization look when you came on board, and how were you able to scale it?
Good question. So, obviously we were less we had some of that underlying infrastructure, but we were less complex when I joined it. And as our current strategic plan has us focusing on development and growth across a lot of those combinations. So you can imagine with 5 signature programs in 122 potential countries, the many-to-many relationships that drive that complexity that we needed to figure out how to account for financially. And then also, as we continue to mature on our strategic plan, one of the other aspects that maybe some of you others that are dealing in the nonprofit world are dealing with is we've started engaging more sophisticated donors. Some of what you might hear called or be involved in the venture philanthropy space where they want to see measurable outcomes for their investment or donations. And so measures such as ROI become much more important for us, even from a program execution standpoint. And so that complexity has driven us to have to step up our finance functions, our functionalities to be able to accommodate all that so that we can not only account for it, but report in a way that demonstrates the impact and accountability.
Perfect. Very good. Jeff, when you were starting up XCAL, what did you think about on the finance side? How did you set it up for growth?
Yeah, I'd say the setup for XCAL started probably anywhere between 10 and 12 years before we opened. This was a new business. I will say, like Wilson here, dealt with a lot of complexity in Boeing, being acquired by Boeing, and then doing mergers and acquisitions to create a new business unit and integrating those companies into, a Fortune 5 company at the time, like Boeing, had lots of complexity. So I had lots of experience in dealing and thinking through complex problems. XCAL was a different deal. First thing, it was my money. So I was really worried about that. So doing the planning and thinking hard about how we were going to deal with what is a pretty complex business. I didn't mention what it is. XCAL Shooting Sports and Fitness. So purpose-built building. We built a 97,000 square foot building in Northern Virginia. We bought the land, we built the building, we managed the construction project. So we built the exact building we wanted to execute our business. It's an indoor gun range, it's a retail store, we have 2 restaurants, we have a 35,000 square foot fitness facility that includes a spa, a dojo, functional fitness, light CrossFit, a private members lounge with a bar, a restaurant, meeting rooms. So there's about 6 different revenue streams in there and about 198 employees as of yesterday. So a pretty complex business. The key to that really was the planning early on. It was about thinking how you were going to run a business with multiple revenue streams, what were the enterprise systems you needed, everything from point of sale to food service to inventory control to finance and accounting. So it's really thinking about that complexity early on, planning for it, not just for the existence of the first business, but the growth of the business. We always knew we wanted to grow. So it was really finding those enterprise level solutions that scaled up as we grew.
Were those both tools and software, or were they process oriented?
It was both. I came out of a company where tools and processes were pretty important. Boeing is a process-based company, so processes were important. But it really was about finding the software tools that enabled us to run a gun range, to handle memberships, to sell food, to conduct inventory. All those things were really important. So it's a combination of both of those things.
So Wilson, as you've grown, what are the KPIs or metrics that you track to hit prison fellowships, missions, and goals?
Yeah, so it's probably easiest to think about kind of 4 groupings of metrics, one being more of a hybrid between financial and operational. So one of our key metrics is from both a program management standpoint, or how we manage our program activity, as well as from a donor standpoint, or how we have to report it, is like the cost of beneficiaries served. And so that's one key metric, and you kind of heard it said different ways today, but really get focused on what your key KPIs are. And for us, that's one of our key metrics because it not only helps us manage, but it also helps us report. That's one example of a key metric that we measure across the enterprise, but we retain the underlying flexibility to be able to break that down by the 122 jurisdictions or even by programs. So the many possibilities in which we can group the data allows us to figure out different things we can leverage to improve our performance across certain jurisdictions or groupings of jurisdictions or groupings of programs. And so it allows us some flexibility, but again, the upfront thought was to think through the KPIs that matter the most, and then design the underlying flexibility that allows you to leverage its power. Some of the other metrics are going to be a little bit more standard and what maybe some of you use. For us, we have 4 different revenue streams that we raise money off of, and we measure the ROI in each of those revenue streams. And we also differentiate between acquisition and cultivation. So acquisition being how do you acquire the initial donation, and cultivation being how do you cultivate that donation to become a greater amount over time. And so we measure those things, and then we also measure the impact of different tactical changes that we might try to increase the ROI. So spend less and raise more would be the ideal situation, but we're constantly experimenting. And so I guess one encouragement that I would encourage all of you to think about is experiment, and figure out what works for you, and then fire the big shot. I'll borrow his analogy a little bit, but then figure out what you really want to fire the shot at, and then fire the shot, right? But experiment until you can figure out what that is. And then a couple of the other ones that are more standard is we also keep track of a program management rate, so the effectiveness and efficiency at which we execute our programs across the world. And again, we could break that down if we need to. And then we also track what we track as overhead by external definition as well as the internal definition of overhead. And so there's a lot of watch organizations out there that track how you form as a nonprofit. And so there's certain industry standards that they measure us and grade us by. And so we keep track of those, but we also keep nuances of those measures internally so that we can manage improvements in certain aspects of it, so that we can not only sustain, but also ready the infrastructure for when the next step up, scale up needs to happen.
Perfect. Very good. And Jeff, what about your KPIs with your multiple revenue streams?
Yeah, let me ask a quick question first. How many business owners out here? All right, so you'll get this. In May of 2022, when we opened, I only had one KPI that really mattered, and that's fundamentally, could I pay the bills at the end of the month? We were a brand new business. We were a pretty big startup. Expenses were pretty high. I opened the doors with about $2.5 million worth of inventory on the shelves. So the key KPI was, what was my revenue stream for the month of May? Could I pay all the bills, mostly the vendors and payroll? And then it went from there. We had our 3-year anniversary on May 8th. The KPIs today are a little different than they were back then. And they evolved, and they continue to evolve. It's now, for us, it's really all about the business performing more efficiently, us being better at all the things that we're doing. They're classic KPIs, though, for anyone who's a business himself. You're looking at your monthly revenue streams. I'm looking at each of those revenue streams and seeing how they're performing against the previous month, against the previous year, and against our projections. I'm at about $5.4 million annual in payroll. So the number one expense outside of my mortgage is $5.4 million in payroll. So it's really about building a solid revenue stream across all those to meet your expenses, to grow the business, and to return a profit to the investors, of which I'm the largest one. So I really care about that one a lot. But there's a metric that we're probably not going to get out of the finance department, but I will tell you it is the key metric to me in the business we're in. I said we're shooting sports. We have restaurants, we have a retail business, we're a fitness center. 100% of our business is customer service. We're in the customer service business. It's just the service that we deliver to those folks are those things I just mentioned. So for me, the best metric for us on how we're performing as a business is how our current clients feel about us. Do they return? Do they renew their memberships? Am I gaining new members each month? And we have grown new members at XCAL from day one up until yesterday. We're still growing. So it's a customer service one. If we get that right, the numbers will work. Back to Ted's initial slides. Know what's important to you. Focus on those things. Hire the right people in each of those areas. Hold them accountable for those things, and the numbers will work, particularly if you have a solid business plan and you've worked hard at it. So I think those are the key for me right now.
Perfect. And you answered one of the questions, what are the non-financial metrics, which is great. I do have one more question, though. Now you're 3 years in.
Yeah.
What would you have changed from initially making that decision in a system or a process that you would go back and change?
I'd say insight looking backwards is great. I think the learning over the last 3 years are probably more important than thinking about what would I do different. It's really, what am I going to do now based on the learning? I'd put our patio on the eastern side of the building instead of the western side of the building. That's a practical thing. We built this beautiful building. We thought we solved every problem. And we put our beautiful patio and our club on the western side of the building, and we melt all summer long. So it's almost unusable. I would spend a little more time earlier on the integration of our systems. It was hard to find a single enterprise system that would serve all of our needs. In fact, we didn't. As we acquired systems to help run our memberships, run our retail, run our food service, run our fitness center, I'd pay more attention to the ease and integration of those subsystems. We've made one big change because that integration just wasn't possible. It's really key for the strategic view of the company in those systems being able to exchange data in a meaningful way so that we can do analytics against the overall performance of the business.
So Wilson, what is one metric you looked at today for the business?
Well, kind of similar to Jeff, one of the key metrics that we look at on a weekly basis is our cash flow. And so our situation may or may not be similar to what you deal with in your for-profit business or nonprofit, but we have this interesting pattern. We operate on a fiscal year, July to June, and we have had this pattern since, or what notice, I guess, has been there historically, but we have this pattern of being more expense heavy in the first half of the fiscal year and revenue heavy in the back half of the fiscal year, which makes for some very challenging cash flow management, particularly if you're dependent on some significant contributions earlier in the year or earlier than is currently being forecast to fund certain investments in activities or infrastructure. And so it makes for some dynamic planning, and we have some room for improvement. But to answer your question, cash flow, for the time being, until we're better able to solve or narrow the amount of cash reserves we need to keep fairly liquid to manage our fairly expense-heavy front-end, revenue-heavy back-end cash flow.
What would you recommend to a new business owner just starting out and they want to scale their business and setting up their systems, just as a recommendation?
Okay, so I'll probably echo what some of them have been said, but definitely I'll also borrow Ted's line. Think with the end in mind, although we call it a little differently internally. So internally, we talk about right to left thinking. So think of where you want to be on the right-hand side, whatever that time horizon is in your planning horizon or strategic planning horizon, and then work left from there to understand what levels of maturity you want to be at certain points and the infrastructure necessary. So using ourselves, for example, we have, like I said, 3 subsidiaries in different parts of the world. And so you want to understand just from even a system or project standpoint, what set of requirements do you have that you need to design for at certain levels of maturity on the way to where you want to be on the ultimate right-hand side or endpoint. And so work backwards from that. And then for us, we assessed whether we wanted to do some of it internally via system or process or externally with a strategic partner. And so one example for us is we have a subsidiary in Germany. So we decided very early on that we didn't necessarily want to have the internal capability to do German statutory accounts in German language. And so it wasn't important enough for us to do that internally. So we have a management team partner in Germany that does the local stuff for us and takes our books, and we keep one standard chart of accounts throughout the enterprise. And so it's things like that, working right to left. And then you want to kind of work the different development and implementation or testing and implementation milestones you have in your systems or processes to scale up there. And then, like I said, if you want to partner with certain firms to do some of that work for you, that's a consideration if it's not worth the cost of doing it yourself.
Very good, thank you. And Jeff, what would you recommend to a growing business just starting out?
On a couple of different fronts, I'll hit some of the finance things and a couple other principles that I think are really key. I'll stay focused again. Understand what's important to your business, understand who your customers are, what you're delivering to them, and stay focused on the important things. It's really easy to get distracted. And that distraction really, in the end, will slow down your rate of growth in the area that you've chosen to be focused on. Understand who you are, what's important to you. Mark's left the room, but he said something earlier. that I disagree with, and I'm never going to hold my tongue here. We all work through administrations. We have a new administration now. We'll have a new 4 years from now. We'll have another one 4 years from there. I mean, I'm old enough to where I've seen lots of administrations and lots of changes. And the reality is that change is going to happen every 4 years. It's key to stay true to yourself and who you are. Your character, your principles are really important. Mark said, don't mention DEI. I don't care if you mention or not, if that's important to you. If treating people fairly, if being equitable, if being inclusive is important to who you are and what your business is, don't compromise that for a contract. Realize that that's the environment you're in, and you may behave slightly different, but never compromise who you are. Because the moment you do that, you're going to veer off the course that you're on. Whatever they are, they're yours. Believe in them and stay true to those things, and it'll pay off for you in the end. I promise you that.
Do we have any questions for anyone here?
So Jeff, my question actually is that you mentioned that, right now, efficiency and performance is important to your business. And then you were also talking about customer service. So my question is, what are some of the tenets or the values that you actually drive within the people that work for you to ensure that you are actually attaining that? And then my other question for Wilson, not Mr. Wilson. Wilson is, you also talked about having 3 subsidiaries, right? And so how do you ensure that your values and your goals transcend across those 3 subsidiaries so that, no one is kind of acting, out of line? Wow.
I've got the easy question. So the customer service part really starts from myself and Jason and Eric and Jack and my family. And our principle going into this was we wanted to treat people like family. We wanted to treat our customers like family. We wanted to treat each other like family. We wanted to be kind. It was not a principle that we found as we did market research in the fitness industry, in the firearms industry. This is who we are, and we wanted to project that into our business. And that started by treating our employees like family. Because in the end, what we deliver to our customers is delivered to our employees. So you really have to start that culture by treating the people that you hire, that you're entrusting the relationship with your customers with like family. If you do that and you encourage that, then they treat your customers that way, and that becomes who you are. So Kofi, wherever you're at, that's the key to that there. And in that process, as we treat our family members and they understand how we're working to be more efficient and more effective so that we're a profitable business, it's easier to have those conversations. So I think that's how we do it. I'm not sure that scales up to a country, but it certainly scales in our building.
All right, just a little bit of context around the numbers. So we're organized, again, headquartered in the US, 3 subsidiaries. So in terms of staffing, we have under 50 people. But if you count our affiliates and their employees, we're up to like 4,000 people. And if you count our affiliates volunteers, concentric circle moving outward, we're at about 48,000 people. So it's kind of a catalytic, concentric circle management or leadership model. And so back to your question, what we do is spend a lot of time, and we spend a lot of time in our leadership team talking about how to do this better, is we do certain things together as what we call all staff, about the core 40 or so people that we consider staff in different parts of the world, including our subsidiaries. So once a month, we meet an all-staff meeting, and everybody's treated as if we're one staff, but we're just geographically dispersed. And so we do spend time like that. And we also, each day, carve out a half hour to pray about the things that are important for us as a ministry, and for personal items if that comes up. And so Mondays and Wednesdays, we schedule early morning East Coast time so that other people in the world can dial in. And on Tuesday, Thursday, and Friday, we do it more in the middle of the workday here so that it tends to be more US focused. But to your question, is we make sure we spend the time together to do the things we need to do together to build out, strengthen, emphasize the core values that we're about and extend that culture throughout the organization. The other thing we do is, particularly those of you that deal with a geographically dispersed organization, and I know this is one of the reasons that Ted and his organization does this, is you need to bring your staff together in person on some recurring basis. So what we do is every September, we bring everybody in the world together to our headquarters in Ashburn, and we spend a week together doing all kinds of important stuff in terms of work together, project activity, and just team building and other things. Who knows, we might end up at a shooting range. But just some things together that will help us connect interpersonally to make the working relationship much more effective when it's virtual.
Well, Jeff Brown, I want to thank you very much for coming. Wilson Geong, thank you for coming. XCAL Shooting Sports, join the membership, go and attend. Prison Fellowship International, please donate. There will be a scan code here as well. I want to thank you both very much for coming. I think that's very insightful.
Thank you.
Thank you very much.